So today we are going to discuss a very good share called Navneet Education. Now, this share belongs to communication services, which is basically involved in publishing of books. If we look at publications, Navneet Publication, Smart Workbooks, Vikas, Grafalco, School Books Premium brand, and HQ, which is a stationery brand. You might have seen this HQ brand in the stationery shops. So at present, the price at which it is trading in the stock market is 95 rupees. All the indices are green. Current price is less than the intrinsic value, which is the PE ratio. You can see the sector PE is negative and this has a good PE. Then the return on equity, it is good. Dividend returns is also good. It is good time to enter as the stock is not in the overbought zone and there are no red flags as well. Also no probability of default and it is among the top performers in all the checks. So this is a small cap company. 2156 crore is the market capitalization. Moderate risk is there. If we look at the returns from the inception, that is January 2000, it has given around 229% returns. So over the period of time, it has given considerably good returns, and even if you did a SIP, it would have given you not a very good but a significant return. So I would say this stock for long-term purpose for 20 to 30 years would be a good stock to invest. Let us look at the presentation, the company profile, and it is engaged in the business of publication of education and non-education books, manufacture of paper and non-paper stationery products. So let's quickly look at the presentation given by the company as on 31st December 2021. So let's first take the look at the company overview. Now, it's founded by Gala Family, education syllabus-based supplementary content provider in print and digital medium. So basically, they provide textbooks for CBSE and ICSE board all across India. And it has built a strong brand in educational content, which is certainly going to be there. Also, if you look at state board curriculum, Navneet, Vikas, Gala, CBSE, these are the publications, stationery, e-learning, and also the Orchard International School and Eduvate. So these are the sponsor brands, and since it is into e-learning, which is going to be the future, it has good future prospects as well. So 35 million students, 5 state boards, 5,500 publications, that is number of books, 350 hours of digital library, 25,000 state board schools, 4,000 digital classrooms, which is good, 8,500 schools, 3,000 number of employees, 300 authors, 3 printing and manufacturing locations, presence in state for supplementary books, 248,000 retail outlets, 1 lakh ton paper consumed, stationery, and 25 countries the presence is there. So it's been 6 decades for Navneet. In 1959, the first digest guide published for standard 10th, and significantly over the years, it has now in 2020 launched EdTech products. So the progress is quite good. A lot of products they have built. The first educational publisher to be listed on Bombay Stock Exchange and National Stock Exchange in 1994. Okay, that's a good achievement. This is the global presence in 31 countries. Okay. Supplementary books, Maharashtra and Gujarat. Digital presence, Maharashtra and Gujarat. Orchard International, which is school, I believe. These are the textbooks in these states. And eSense Learning, which is institutes using top class service, students using through top scores, that is 1.2 million students, 350 hours of digital content, 15,000 classrooms have been digitized, team of authors, illustrators who are working with this company. So it's a good progress. Indeniaka Learning, now school visited 8,500, extensive product catalog, educational, instructional, and informational product. It offers specialized curricular learning solutions, and key export market include Sri Lanka, Nepal, and GCC. K-12 Techno Services, number of schools, this is 42, location 7, number of students 29,200. Over the last few years, quality direct education is great demand in the country. Yes, these are the funding companies. Navigating the next strategy, the digital shift, and this company is already into digital education, which is a very good prospect. Well, the impact of education, the COVID impact on education has been significant. Almost all the schools are closed. More than 1.5 million schools in India are closed amid the pandemic, and there are many obstacles in rolling out large-scale digital education program. So only 24% households have internet access as per 2019, which I am sure would be reaching more than 40% by now. In small town and villages, only 4% of population has internet access, which I am sure will be around 15% now. The Education Ministry has slashed its digital learning budget to 469 crores. Also, the World Bank predicts loss of 440 billion of Indian treasury due to the closing of schools. Even with the rise in digital learning methods, there are many students who cannot avail these services. The disruption in school services has led to severe impact on the health of children. There are numerous challenges which have surfaced. School lack the infrastructure to maintain social distancing. So these are some of the reasons why the education industry is stuck where it is because of COVID. Now, the future of education is going to be through technology, that is through e-learning. Why? Because it will have low cost of online education. You can increase a lot of skills, so the employability may increase. The government is also coming with a lot of digital initiatives. The smartphone user base is being increased, growing internet penetration, increasing disposable income, young population is increasing, unavailability of quality education, favorable e-learning government policies such as Skill India, Swayam, Sankalp, Strive, Diksha. So the government is moving towards making e-learning an important part of education in the future. So in the environment of fast-paced education technology, in the post-COVID-19 world, there is a possibility of healthy partnership with strong balance sheet and good liquidity. Navneet Education is going to be the pioneer in this field. Now, if we look at the financials, if we look at profit after tax, which is around 5,468 lakhs, okay, so it will be around 54 crores rupees of profit, which is quite significant and good. So that's total income has increased by 80%. EBITDA has also increased. Profit before tax. Also the segment revenue, the publications, stationery, and the export, domestic and export, have seen significant increase, which is a good sign. Working capital cycle, if we look, receivable, inventory, and inventory days, so it is increasing and it is good. Consolidated performance, it is quite good. The ability to significantly expand its footprints in states other than Maharashtra and Gujarat. This is the future prospects. Ability of the company to stabilize the business operations and formal education system growth should rebound to 10 to 12%. Corporate and shareholding information. If we look at the Promoters, it is still more than 60%, which is a good sign. So the market capitalization as on 28 January, it's around 2,105 crore. Stock price 92, which is now 95. And the stock performance has been quite good. Because of COVID, it has come down, but 20 to 30 years down the line, this stock is going to move in the upward direction. So I think it's quite a good decision to invest in this share. It is going to show good prospects. If we look at the financials, if we look at the forecast as well, it is going to show good forecast. The revenue forecast is also good. So it's a safe investment. The financials, if we look, it is great. Industry revenue growth high, market share is also increasing, industry income is also increasing. So here you can see the revenue has fallen because of COVID. Profit before tax has also fallen, and that's why the share prices have fallen as well. But the company as a whole has strong fundamentals and is in a better position to have a great future. Promoter holding is around 63%, which is good. 70.78 crore profit. So I think it's a good company to invest in, and this is something which you should definitely consider as a long-term future.